Good morning. Welcome to my Forex market analysis. And it's 13th of August, Thursday today. So let's start off with the XY. Since last week, last week we had expansion, and now we are just in a consolidation phase. So market makes bullish fair value gaps, it breaks it. Market makes bearish fair value gaps, it breaks it. And both of the moves, this big move and this big move, is because of news. So basically, we can say that market is just moving when there is some kind of news, which we can expect if I look at daily time frames since 31st for the last 2 weeks, we are just in a consolidation phase. Any trade taken here have higher chances of losing than if you sell here. So if we look at the drawn liquidity on daily, we have this drawn liquidity till where I'm expecting price to reach and then eventually turn around. We have a sweep from below as well. If I look at yesterday's price action, there was CPI news, so price go down, go down. It sweeps last 2 days low, and then we get a strong bullish candle to the upside. We have a bullish fair value gap with us, this one. But now the question comes, is it just a random bullish fair value gap, or are there chances for price to tap into it and push to the upside, going towards the daily drawn liquidity that we are aiming for? So let's read the price action. We have a bottom price sweep. We go slow to the upside. There was a bearish fair value gap. We broke it to the upside, so it's invalid now. Yesterday, we had a strong bearish candle which turned into bullish because of this wick, and then we get a good bullish candle. There was a bullish fair value gap, and we get a change in state of delivery as well. Everything in price action screams that it wants to go up. We try to go down here, we fail and we close up. We break to the upside and making a bullish change in state of delivery. So there are chances that we can come into the fair value gap and then go to the upside. If we do that, it will be on daily candle, it will be we will open, which is here, go low, go high, and then close. So which is just expansion, pullback, and then expansion. Expansion to the upside, reaching these highs. So we have a zone from where we can expect price to go up. We have a 4-hour order flow, which is to the upside. Although it's not the cleanest, we are not making a lot of bullish fair value gap. But yesterday news gave a direction to the price action. It gave a direction to the upside, breaking the change in state of delivery. So we have an expansion, a pullback, and I'm expecting an expansion. So the first step is to draw the daily liquidity, which we already did. The second step is to go on 4-hour and mark our 4-hour order flow. So in which direction price wants to go, which is it wants to go to the upside. It is making high rise and high lows and making bullish fair value gaps. And we also get a bullish change in state of play. So which means price was bearish and it turned bullish now. So we have a zone now. Now our job is to find a point in market from where the price could reverse, which we'll find on hourly time frame. So if I look here, clearly the point is just this, which is also Asia low. So this is a swing point, which is into a fair value gap. What I'm expecting is Asia session to close, London to open, comes down, sweep, go to the upside. This is the first option. So let me draw the session timing. Yeah. So Asia closes, London open, go down, sweep, give me a good candle, I take entry, stop loss below, and let it ride. The second option will be in New York. Asia stays like this, London is consolidation. New York opens, sweeps this liquidity, and then we go to the upside. So we have both combinations. Either we can get a trade in London. If London just goes down, we get a sweep and push to the upside. Or if London stays sideways, then New York opens, goes to the downside, take a trade, and then goes to the upside. So I'm bullish on uh, dollar index. I need price to sweep this level, which is also Asia and which is also a swing point. So it's a high low. I want price to sweep that. So now we have a price and we have time from where we want price to do the stuff. I'll just set an alert here. Yeah. So now let's look at EU. On daily, what do we see? Price is just in a consolidation range. We have a drawn liquidity here or here, and we also have a higher high here. Yesterday's candle, you can see we try to go up and then we fail and we close to the downside. If I look on 4 hourly time frame, what do we see? We still don't have any bearish change in state of delivery, which we'll get after this point. Why? Because this is the move from where the price made a higher high, and this will be the most bottom part. So it will be a change in state of delivery. Yesterday price did not close below this. I wanted price. If price would have closed below this, then it would have been similar to DXY. We get a push up, change in state of delivery, and then pull it back and take a trade. But in EU, we don't see the same price action. I want price to close below CISD and then give me a fair value gap. For now, it's just a range. We go up, slowly down, try to go up, fail and down. So I don't think there is a trade today. But if we break to the downside, then tomorrow again I can keep looking the expansion and pullback and then keep taking a trade from there. So nothing on EU for today. Let's look at GU. Okay. What do we see in GU? There was this high, which price failed to break above. We tried to break, could not. Try to break, could not. Try to break yesterday, could not, and came back in. So this will be also a sweep. So price is clearly saying that it is trying to go up, but it is failing eventually. But on daily, it still does not mean that we are bearish. Why? Because we still have bullish fair value gaps, and we are still making higher highs and high lows. So it means price is rejecting. It's the momentum, the bullish momentum is dying, but it is not reversing. The price did not reverse yet. On 4 hourly, what do we see? We see that yesterday we tried to go up, and then news, as soon as news open, we come back in. So it's a breakout and then fail to break out and then break back in. Doing so made a change in state of delivery, made a bearish fair value gap. So we have a change in state of delivery, we have a bearish fair value gap. If I extend this bearish fair value gap, if I extend this bear value gap, then it is an expansion, a pullback, and an expansion again. Expansion, pullback, expansion. So the daily candle will look like open, go high, go low, and then close. But the thing worrying me about this is there is a bullish fair value gap here and a low. So the thing worrying about to me on daily is price could just be expansion, pull back into the fair value gap, and then continue expanding to the upside. If I look at 4 hourly, this is a really good swing point. So expansion, we get a high low, we get a high high. And what price does is it goes back to the high low. There's a fair value gap. It takes out this liquidity here, takes out the liquidity, and then continue pushing to the upside. So what today's candle will do is it will open, go low, make a wick, go high and close. So it would have turned a bullish candle by the end of the day. So the only thing worrying to me about this setup is if I take it, first of all, I cannot take a second. But if price reaches here first before giving me an entry, so what I want price to do is to go up, tap into the fair value gap, and then I get a trade to this level. So I can take out my profits until we reach here. But If price does this, it goes low and then it comes up and then it gives me, then I won't take the trade because by the time the candle will have been open, go low, high, and then close, which is not typical bearish scenario. So what I want for price to do is let's look at on hourly, not on 4 hourly. We have a bearish favor gap, we have a change in state of delivery, we have a sweep. So everything screams that price wants to go down. Now we have a zone from where I'm expecting price to go down. Let's look at hourly. Do we have a swing point? Yes, we have a swing point. This is our swing point from where I'm expecting price to react and then push to the downside. Let's mark the timing, which is 11:30. 17:30. Okay, so we are in Asian session, which is this blue outlining, the blue background. Let's say by this time Asian session closes somewhere over here. London opens, go to the upside. We sweep Asia liquidity, which is also a swing point. So we got two things. We tap into the bearish fair value gap on 4 hour, which is this zone, and then we push to the downside. So just like DXY, we have a same level. Asia stays here, London opens, go down, take a trade. In GU as well. Asia stays here, London opens, go up, take a trade from here. If we cannot do that, then London stays here, New York opens here, and then we go up, sweep, and then we push to the downside. These are two possibilities by which I can take it. But if before going to the upside, price just goes to the downside and we sweep it, and then price goes here, then I cannot take the trade. Why? Because the whole setup would have turned from being bearish to bullish. Because if you see, we already tap into the fair value gap, we already sweep the swing point, and now from bearish it has turned bullish. So for me to take a trade here, I want price to go up first, go up, give me a trade from here, and then I can sell. Rather than price going down first and then going to the upside. If it goes as soon as the price touches here, that's it. I'm not looking to trade on GU. So EU does not have any trade. GU could give a trade, but only if it goes to the upside first, not to the downside. And we also have two news, GDP and PPI. So both are at, this one is at London Open, this one is at New York Open. So yeah, that's it. Thanks for watching. Have a wonderful day.